Hey, what's up, guys? Sam here, and I'll be doing the free video for Friday, January 20th, 2023. So, as usual, I just wrapped up the premium video for the good folks in the gold room, and we'd looked around a couple things in the market. We looked at bonds, we looked at the dollar, we looked at the indices, and really what I want to focus with you guys what I think is the most helpful thing. So, without further ado, let me show you a couple things here that I'm looking at. There might be kind of a shift in the market happening, and I think it's going to be really important to know because it's going to dictate what takes leadership precedent, probably at least till the end of the month. Maybe longer than that, but into the end of the month. So let's start here with SPY. On SPY, not really much has changed since last week in terms of what we were covering. The squeeze has progressed a little bit. You now have a secondary higher bar on your squeeze, and support did hold. So this week was pretty much kind of a heavy back test of support. After the beginning part of the week, we crashed down to the hourly 200. I think it's probably better if I could just show it to you. So let me load that up. So you can see here we kind of got a little ahead of ourselves last week. We go into this like trend line thing that's been hit 4 times, 5 times, 10 times now. But this time it actually held the support level. You see how it pulled back all the way to the hourly 200, and it actually held there. And it was a very heavy back test. And not only did it hold, but it held on a higher low. And then once it filled that gap, off to the races, right? So not bad. It basically recharges the market, right? Because when you do this, it's kind of like you're on a long road trip and you have to refuel at a gas station and maybe go to the bathroom. So refuel your car, refuel yourself, and then you go the next half of the trip. So it's ugly, but it is relatively healthy as long as it holds, right? And so far it has, and it has now some early buy signals, similar to what we got back here, right, which kind of launched us into outer space. So at this point, in my opinion, we're no longer allowed to go back below 390, right? At below 390, and I'm just going to put this out there. I don't think this is what happens, but it's important to understand your risk. Back below 390 would invalidate, and honestly, I could probably say 391, but let me just say 390. Back below those double lines, basically back below that gap right here, you're not allowed to go back in that box. You're allowed to pull back to 93, maybe even as low as 92, although that would be uncomfortable. 93 would be better, and frankly, no pullback would be better. But you're not allowed to go back below 390 because if you do, that would invalidate this entire setup. There's no shot this would hold, in my opinion, on a back test of 390 again. And at that point, it would actually become, in my opinion, a short. I think that's the much lower probability. What we should be looking for here is for support to hold right around 394 to 393. And then we would be looking for another fight at 400. Keep in mind, the bears still dominate 400. You can see that right there very clearly. And they hit very hard, but if they ever face any pushback, it's like a bully in school, right? It beats up all the kids until one kid punches him back and then he runs away. It's kind of like that. So at this point, as long as we hold support here, roughly 394 to 393, then I think our battle is yet to happen again at 400. And then above 400, we still have this big air pocket above 400 to about 410. If we happen to get above 410, let's not put the cart in front of the horse. It gets a lot more interesting. But that's not a conversation for this video. The conversation for this video is to understand 394 to 393 is your support level. And if that continues to hold, we would look for a secondary battle at 400. We would have recharged the market. And actually, we have now some participation from tech, which we didn't have on the first test, which is going to be helpful. Let me show you the QQQ setup here. There's actually a really cool trade that we got into today just based on this setup, and I want to show it to you. And the levels that I gave you on the SPY, they're the same. They're going to equate to the QQQ. So wherever the QQQ is, SPY, SPY support, 393, 394, the 392, 394. I don't remember exactly. That's where support will be on the Qs. Roughly 279 is roughly the level, and then once the SPY gets to 400, that would equate to resistance on the Qs. I don't really run the levels on the Qs. I just use the SPY levels as a catch-all. So here's kind of the cool signal that we looked at in the room today, which allowed us to get long, at least for new entries. You see how the 21 comes down and it threatens to cross the blue line right here in a bearish way, kind of like this, but it doesn't. You see how the green line actually scoops, and there's just this minuscule yet significant gap between the two, and now it's starting to widen out a little bit. Not only that, but you had a neutral trend oscillator, meaning that green is above the red, but both are they're not above 50. And very importantly, you actually had a buy signal on your high-low pro right at that exact same moment. So that allowed us to get long right about here and participate in this move to the upside. So very cool setup here. Always pay attention to your 21 EMA and your 50 SMA and the interaction between them, because sometimes you'll see something like this. And the thing is, it becomes a very simple trade, because guess what? If I'm wrong and it actually goes on to cross, I just get out. And I've risked very little. My stop is not very, my stop's not way down here or anything. If this were to cross and price goes here, I'm out. And I risked a minuscule amount to potentially be able to participate in a much larger move. So cool setup there on the Qs, one that you should be aware of. And then lastly, I'll close with this because I think it's important. And we're going to look at the bonds here. We'll do it through the notes, but just understand that the ZT captures the spirit, so it doesn't matter if it's TLT or ZB or TNX or ZN. They're all the same thing. So this is just the notes. And the notes here are showing us a couple of things that are pretty important. So you have this low, and then you have this much lower low, right? Price goes down significantly. Why does the momentum indicator go up? You see that? So price is crashing. This is pretty much a crash. And momentum is actually coiling higher. That's a positive divergence. Then you get a positive crossover. You see what happened the last time that it crossed negatively was back here. And that was way up here. And then you crash. That's a legitimate crash. So you are getting inverse signals. This was the signal to go bear, and now you're getting a signal to go bull. Also, if you look at the lower indicator, you've got nothing but red sell signals for a year, over a year. Right? You had some sell signals up here. This was your first warning. This was your second warning. This was your third warning. And you see there's no up arrows at all until right here. And that is coinciding with this. And it's coinciding with a little bit of structure where you see the 50s scooping under price and acting as support. The blue line goes from a downslope to a stable and slow upslope, which is a necessary transition. Right? So now that blue line, instead of acting as a ceiling, is acting as a moving floor, which is generally bullish. So you have this, low compression squeeze, you have the positive cross, and you have your first up arrows in 12 to 18 months. So why do I show you the bonds? Well, you could play it through TLT. That's just a direct play to play it. A direct way to play it. But in reality, if you understand what this is saying, it's implying that tech should be the leadership, at least as long as the signal stays active. So if that's the case, then you actually want to be in the things that have been beaten up, and you want to be in mega cap tech. So the Apples of the world, Amazon, Meta, NVIDIA, semiconductors, I think play extremely well with this signal, and semiconductors actually have a better signal than the QQQ. Speculative things like Zillow and Shopify and Square, I think all play extremely well with that signal too. So for now, there's some pretty big things happening under the market. And the most important thing to take away from this video is the potential rotation and potential outperformance that would be coming from the top of the market, meaning the biggest companies like the Apples and the Googles and the Teslas, and as well as the stuff that's been crushed already, which is the Zillows, the Shopifys, the Squares. Basically, if it's tech and it's highly shorted, it probably runs pretty strongly, at least for a while. All right, guys. Well, that's my time. Hopefully this was helpful to you. If you have any questions, drop them down in the chat. If you have any questions, comments, concerns, we'd love to hear from you. Any type of interaction you have with us does help our channel. So before you leave somewhere else to go somewhere else on the YouTube, leave us a like, leave us a dislike. We don't care. But more importantly, leave us a comment and also subscribe. If you're not subscribed, do subscribe. I think we put out some pretty good free content for you. So pay it forward with a subscribe, and double pay it forward if we've helped you this week with a comment. I'm going to be having Chili's tonight. I made my friend, the worst trader in the world, a couple of bucks this week, so he's paying it forward with a little bit of Chili's. So let us know what you're eating tonight, or what you like to eat from Chili's, because I might go back for seconds after I'm done with this. All right, guys. See you next time. Cheers. Hey, traders. This is Sam with Simpler Trading. I want to thank you for watching today's video. Hopefully you found the information in it helpful. If you did, leave us a like, leave us a comment. It really does help us out with the algorithm. And if you want to see us trade live with our own real money and be part of the community, come and check us out at simplertrading.com.